What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 9th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we may be talking about what is probably the biggest news event in the crypto space over the last month, and that is the announcement on late Monday that essentially PayPal is launching its own stablecoin, PYUSD, short for PayPal USD. Now, I want to spend some time here to give you a full coverage, non-biased view about what this news means for the crypto space. No matter what, at the end of the day, it is a positive development. But the question I want to try to answer here is just how positive and what this really does mean for the crypto sector off of some previous history we've seen around the project and what we know about so far. I want to talk about all the details you need to know about it, as well as what it'll mean for the market. So if you guys happen to enjoy this video, consider dropping a like. It's one of the greatest ways you can support the channel. It's raining outside. It's a cozy day. Let's go ahead and kick off the conversation and let's get started. So I wanted to start off here by just talking about the price performance here in Bitcoin. Bitcoin made, roughly speaking, about a 2.5% price move following the news here from the absolute lows on Monday. We came up around $28,700 all the way up towards a relative peak at just right above $30,000, and we cooled down here towards around $29,800. So pretty much up about $1,000, give or take, here from those relative lows. I want to spend some time here to talk about why the market really only bumped up about 2.5%. Some people really were expecting a massive move off of this news. And before I talk about why I think the market is a bit more moderate here in its response, and I think it's rightfully justified, I want to spend some time here to say that at the end of the day, guys, we're generally bearish. We're generally believing that prices are going lower. However, this is a really positive development. And it's the reason I say that this is probably some of the most positive and real substantial narrative-driven news that could actually provide some support for Bitcoin. The reason I'm saying this here is because at the end of the day, more stablecoin on-ramps is more liquidity. PayPal is starting from ground zero here with its new stablecoin. Essentially speaking, that liquidity can only go up for now, or it's going to stay where it is. And the fact of the matter is that that's a positive thing for crypto. We are in desperate need of liquidity. I don't think you guys need me to pull up the chart here, but I will, to show you, again, the USDC and USDT stablecoin liquidity in the market. And even if you take, again, the other additional stablecoin players in the market, I mean, we are in desperate need of liquidity in the crypto space. It is continuing to move down here, generally week by week and month by month. Month by month, we are removing hundreds of millions of dollars of stablecoin liquidity. So anything that can even just perhaps keep the trend sideways or slow down that decline is going to be positive for crypto. So my hat's off to PayPal and the team for exploring this, kind of pushing the boundaries in this kind of gray area in the regulatory market. I know that there's been discussion from central banks and also from federal regulators and the SEC around stablecoins. I'm very happy to see that they're kind of pushing the boundaries here and pushing forward more opportunity for people to utilize liquidity in the crypto space. And generally speaking, for those who are kind of curious about how it works, I have to say PayPal did a really good job here about actually entering a new stablecoin into the market. It functions practically in the same way you would think about USDC. There are no costs to generating PYUSD and also reminting it back into dollars and spending in your PayPal account. That's a huge feature here. The only time you're going to pay fees is if you want to swap it or USD, normal USD, within your PayPal account for buying crypto, which is pretty expected and self-explanatory. So you can do all kinds of things with it. You can buy and sell cryptocurrencies. You can, again, convert as well. You can pay people as well with PUSD, and of course just send it and receive it. And it is on the Ethereum network. So it practically, at the end of the day, like, to remove all the kind of jargon and confusion, it functions like USDC, generally speaking. You can, mint, you can redeem. There's a one-to-one backing here with dollars, US treasuries, secure kind of assets, essentially. And the way that PayPal monetizes this, or really makes their money, is that by having your dollars deposited, they're essentially, through owning treasuries and also having the dollars themselves, they're earning the interest on top of that money. You're not earning interest when you own PYUSD. That's how USDC generally works, right? So put all that aside here. We understand here that PayPal has launched this here. Now I want to spend some time, though, to talk about, following this announcement, why the market had a relatively kind of minimal response if we go back to Bitcoin's price move, right? PayPal itself is a titan in the payments industry. a lot of people are kind of surprised to not see such a big outpouring. And some might say, well, Nick, maybe we got to give it some time. And I completely agree with that. It'll be interesting to see how this develops over time. And I'll talk about what we need to track in order to see if this is really going to be a substantial development for the crypto space. I really think time will tell on this one. But I want to spend some time to kind of bring people back to earth, because it's very easy when you see the breaking news headlines on all these developments that you see PayPal getting in on creating a stablecoin, getting in on the crypto industry as a whole. It obviously means that crypto itself is a maturing industry, that must mean the BlackRock Bitcoin ETF is just going to get approved, that all these financial titans are all coordinating together, and they're going to drive the next bull market. That's kind of the narrative, I think, the itch that we get when we see this news, right? And it's understandable why that is. The headlines are designed and written in that way, and there are PR campaigns coordinated to make you feel that way, so that ideally you go adopt these solutions. That's what these companies want, right? And the thing is, at the end of the day, though, we need to come back to ground, kind of the beginning area, and really think to ourselves, is this really going to be something that drives a new bull market? Is this going to be that next major catalyst that could really drive us higher? Because, there's a couple things we need to be realistic about here, guys. Right now, you can take a look on CoinMarketCap. The PayPal-USD contract is available. And if you take a look on chain, there essentially was, I think, one really substantial mint, I think, that was probably internally at PayPal. It looks like it's interacting with the Paxos Treasury, about 25 million PYUSD. But essentially speaking, since it was announced, PYUSD is live. You can go mint it now. You can apply through your business. There's a couple additional layers of KYC AML, same as what you have to do with USDC through Coinbase and Circle's stablecoin. Essentially speaking, though, it seems like some people are testing with it. Maybe this is still just internal testing at the moment. So generally speaking, we have not seen any major new minting here since the announcement on Monday. But I'm not going to say that that's a negative thing. I think it means that maybe they're still going through approval for certain types of companies. They're reviewing, and then eventually we'll start to see that number tick up here. But let's wait and see until we get some of these numbers, because I want to bring people back to a really important example, and it has to do with PayPal itself. Many of you will remember, I think over 2 years ago now, when PayPal finally announced that within the PayPal app during the beginning of COVID, where digital payments were really taking off, PayPal as a company was just skyrocketing in its traditional business model of processing payments digitally. They announced that they were in the PayPal mobile app and eventually on the website, that through your PayPal account, you'd be able to buy cryptocurrencies. And that was a huge announcement in the crypto space. Everyone was so hyped up about it. But when it came time that the volume actually showed up, PayPal wasn't even in the top 20 exchanges by volume. And that says a lot when you consider that a huge amount of the volume and liquidity is concentrated in Binance, Coinbase, Kraken, Bitfinex, and a couple Asian exchanges like Huobi and OKX. Yeah, I mean, that's, again, not a really good sign here. And it's a great example that even though PayPal itself may be a financial titan, even though banks out there in the industry might be offering crypto products, it doesn't mean that's where people are going to buy crypto. You cannot force your existing customer base to just adopt a new asset like Bitcoin just because you offer it from within the mobile app. And this is where, again, I don't mean to say that there's no narrative here and there's no substance. I'm just here to say that we need to moderate our expectations, right? PayPal eventually, I think at the time, in its first launch week, really only did a couple $10 million of volume. And as you guys probably know, for a crypto exchange, while that may sound like a lot, that's nothing. And it slowly kind of died off as a kind of side product of PayPal over time. It's not a huge driver of volume or demand for the crypto space. Not to mention, if we just take a look at PayPal here, since back on Monday, we can see that while it moved up initially off of the news, PayPal dropped right back down and really hasn't moved off of this PYUSD announcement. So Wall Street's not really excited about it so much. This seems, again, like just kind of a given product, so long as in the long term it can make PayPal some money and they can get, $1 billion plus an AUM or something, which I think is definitely doable for PayPal to get that kind of liquidity. Essentially speaking, that can make them a couple $1 million every year, right? Good little side income stream here for a payment processor like PayPal, but nothing that's really going to essentially challenge traditional business models or make PayPal that much larger. The big thing I want to talk about here, though, is that, again, as we're considering this topic here, all right, of understanding whether this is going to be positive or negative, right? I think that at the end of the day, this is more liquidity for the space, and we are likely going to consider as the data starts to become available and we start to see on-chain some PYUSD being minted, we'll definitely be considering this within our stablecoin aggregator, especially if it starts to add tens, if not hundreds of millions of dollars. But the big problem here that I think people need to consider is that, essentially speaking, as we go back to this point here, the last point I really want to make here is that PayPal is a payment process company. So I'll give a great example. People usually cite PayPal's huge network of monthly active users or people who are using PayPal. The problem is that if you're just simply making a transaction on PayPal, you're considered one of those active users. For the Dash report that we have here on the channel, no plug, I'm just trying to list it as an example, but for the Dash report, we have hundreds of members who are on a kind of month-to-month basis, subscribe to the newsletter, or paying annual subscriptions. And those users are that's maybe their only monthly transaction that they're making on PayPal. And because of that, they get basketed into this amount of users, and they still could be just using their debit card through PayPal. So the big point I want to make here is that PayPal's network is not as big as it's projected to be, or at least presented as to the broader public. But outside of that as well, it's important to understand that those users are not the type of users that are likely going to need a stablecoin. I'd say about 2% of PayPal's real power users might benefit from a stablecoin. And that's where you could get those tens, if not hundreds of millions of dollars and additional AUM over the next couple of weeks that could help to kind of provide a buoyancy to the liquidity in the crypto space, so long as that liquidity is easily transferable to Tether and USDC and able to be utilized on the order books of exchanges, not just for payments. And that seems to be the focus here, about payments for PayPal. So again, I just don't know if that's really what's going to kind of save the crypto space here. And when we talk about kind of the narratives that people kind of reach for here, I'm coming back here to the narrative that people will still say, oh, Nick, forget PayPal, with their USD stablecoin. Did you hear about just in news that the BlackRock Bitcoin ETF approval is a matter of when, not if? Some BlackRock insider claims. Now, this is, of course, the headline. This is what's trending on Twitter. And this is so frustrating to me, guys. If you know over the past couple of years how media outlets just love to claim how insider sources or insider or some random anonymous source claims, therefore this news must be true. It is a typical example of how mainstream media outlets and also, kind of micro outlets in the crypto space pry on your emotions, your desires for something to happen. And let's go ahead and let's dive through the tweets here and see what really actually happened here. So essentially speaking, Watcher Guru, which again, we follow, there's some good announcements that come out sometimes, basically claimed that an insider claims that the ETF is a matter of if, not when. Then we find here from Bitcoin Magazine that our contacts inside BlackRock have us think a spot Bitcoin ETF approval is a question of when, not if. In 4 to 6 months, it's a big, big deal. Now, again, this is coming from Galaxy Digital CEO. If you guys don't know already, that's Mike Novogratz. Now, I have nothing particularly against Mike or anything, but what I really dislike is how the space takes one insider source from BlackRock, which is a massive company, who, again, this individual might be friends with Mike, may be really pro-crypto, may really want this ETF to get passed, and essentially is saying now that it's a slam dunk guarantee. And because some insider at BlackRock says it, we're all getting riled up. We're all also excited. Let's just pump Bitcoin up, put all of our money into it. Or as Michael Saylor told us, mortgage your house, go along on Bitcoin, just get all in the market. This is the kind of attitude that, again, will get you burnt, guys. And I only say that here not to be negative, but it's for me to be realistic with you guys here. This is your money, right? This is your hard-earned money. And I promise you the market, through media outlets, through institutional traders and exchanges, will find ways to take your money from you. They are not your friends. They don't care about the space as much as you do. I promise you, they care about your money. And unfortunately, these kind of loose-ended narratives and hopes are what drive markets in the short term, but don't provide the substantial support to really drive them long term. And if all of this was true, right? Again, as we talked about here when we were analyzing the PayPal news, or you'd expect Wall Street to kind of pick up on this. Like, if PYUSD is going to be this huge stablecoin, like every $1 billion in AUM that PYUSD would add is going to bolster like more deposits and the ability to earn yield on treasuries, to earn yield on the savings of those dollars that they're managing. It's a huge win-win for them. They don't have any cost to managing PYUSD. It's just accounting in and out of this system, of this token, minting and burning, right? So there's nothing really costly to PayPal, but the market didn't react to it. Well, how about BlackRock? Well, here's an even fair analysis here. We could look at BlackRock, which has already been going down in its share price over the past couple of weeks, probably due to kind of negative market sentiment. But I'm even going to be more fair here. I'm going to divide BlackRock shares, as we always do here on this channel, by XLF. XLF is the broad financial ETF, the biggest one out there on the market that covers all the major banks, all the major financial institutions. We should see, if BlackRock is just going to come sweeping in and dominating this industry, we should be seeing, if they are for a slam dunk, ready and guaranteed to get that approved by the SEC. They shook some hands behind the scenes. They have all the right politicians in their pockets and all the right regulators who are just going to give them the stamp of approval and get them the front runner advantage to the market. We should see that this is going to be phenomenal news, and it should be reflecting in the share price, because this would definitely boost the AUM, or assets under management, for BlackRock. Take a look at this chart here, guys. Since roughly when the news came out here, we have actually traded lower against the broader XLF. BlackRock has continued to face resistance at the same range that it's been chopped at since January 2022. There's no serious trend here. Wall Street is not biting. They're not sinking their teeth into BlackRock here on the investment thesis that they're just guaranteed to get a Bitcoin ETF. And I promise you guys, you will see it here first if there are real insiders who know about it. Wall Street has a way of moving much faster than people in the crypto space and speculators on Bitcoin's price. They don't go off of hopes. They go off of info, right? You guys know there's definitely corruption on Wall Street, no doubt about it. And they will see that and they will price it in. Information spreads much quicker on Wall Street. Why is this? Why is it that, essentially speaking, maybe it's not so guaranteed for BlackRock? Maybe PayPal creating a stablecoin is not just a guarantee of a new bull market. Well, at the end of the day, guys, right, the ETF thing, at the end of the day, if you guys don't understand that fact, that the BlackRock, while they are a well-respected entity in the financial world, they're a $100 billion, roughly speaking, company in market capitalization. They are by far not the largest banking and financial institution. They are one of the largest money managers in the world when it comes to assets under management, as similar to Vanguard and many other kind of asset managers. When you invest in their kind of low-cost investment accounts where you kind of do passive investing in various industries and sectors, they essentially, yes, do wield the power to vote on behalf of those shareholders, and that gives them a lot of weight in the corporate world to manipulate the directions that companies go in, to determine who is on the boards of these companies. And that conspiracy, well, I don't think it's so much of a conspiracy, it's reality, because they vote on behalf of those shareholders. It leads people to believe in an entire conspiracy that BlackRock just runs the world and that they're going to get whatever they want no matter what. And that's not true. Larry Fink and BlackRock, while they are powerful entities, they do not have direct control over the SEC in getting approved on any ETF they want. I'm not saying they can't get approved, but it doesn't mean that they're guaranteed for it. There was plentiful amounts of powerful financial institutions that could buy their way that weren't able to get approvals for ETFs, spot Bitcoin ETFs, just like these back a year or two ago. And sure, there have been some improvements on the drafts for these new ETFs, but it doesn't guarantee BlackRock is going to get it, right? If the SEC is at a vendetta to essentially suppress Bitcoin's price or suppress the crypto market and only support not paper contracts, but futures-backed ETFs, that dilute the market share and liquidity from actually getting to the source of spot markets, which really determine price, then the SEC is going to continue to do that. I don't see what really would make them change their mind here. And this is, again, it just comes back here. Think about the PayPal news. While I gave a positive spin here, right, that it is going to bolster liquidity, PayPal's not reinventing the wheel here. They're not offering really anything new. It's just another on-ramp into the space. And there's nothing inherently bad about that. But is it what really drives new bull markets? That's the thing we got to come back to, guys. Again, if people are looking to flow liquidity into the crypto space, if it's for payments, fine. That's cool. Using Ethereum and stablecoins, moving $500 million in PYUSD is probably much better than doing a $500 million wire. It's going to settle much quicker. and it's going to be convenient. I'm going to be liquid practically immediately within a couple of minutes. However, if you're thinking about it from like, oh no, they're going to move money into the space, we're going to increase our liquidity, and that is going to go into investing in crypto projects, we got to come back to the question of what are people buying? What are people buying in this space? Like what new DeFi apps am I going to use that money in? What new ERC20 tokens do I want to invest in? All right. And am I any more secure here today than I was a year or two ago from the consistent hacks, rug pulls? Are we getting towards more sustainable investments, or are we promoting meme coins? I mean, those are the hard questions that we got to come back to, guys. And I only say that not because I expect that you disagree with me, but that there are so many people out there telling you that it's just going to be fun and it's just going to be hunky-dory and great. And I got to tell you guys, the music, I don't hear anything. I think the music is stopped right now. And I think the market's waiting for more capitulative lows before we really get a bid. We see that every time we come down into this range here at lower levels, that's when buyers come in and ramp up prices. And if we're not ready to clear through this range, we're likely ready to revisit this range and come down and face more downside in the near term. It's just the reality of it, guys. I mean, again, maybe I could be wrong here. I don't want to speak in a term of absolutes, but you come here for my opinion. And this is my opinion, guys. From analyzing the data, it just doesn't look good. When we can't even hold these trend lines here, like the one we had here, when we completely reversed the XRP SEC supposed victory, all those gains, it's not a good look for the space. And I think it brings us back to a fundamental question here. I mean, if you guys already like the video so far, I ask you guys to drop a like. It's a great way to support the channel if you liked our kind of breakdown of PayPal and our narrative here that we're going to try to keep pretty neutral on the news here, see how it goes. If you guys enjoy that, definitely consider dropping a like. But I want to spend some time here to talk about fundamental issues in the crypto space. And the big one here is that issue of ignoring security and the kind of friction points for the end user and the developers in this space. And that's why I want to spend some time to talk about our sponsor here, Radix. Now, you guys know Radix has been a long-term partner on our channel here. I have followed Radix as far back as 2018, and I've really gotten behind the project here as they've kind of continued to develop their thesis of focusing on DeFi and focusing on improving vastly the experience we're used to as users and as developers within the Ethereum virtual machine, or essentially the EVM environment that we're familiar with on so many layer 1s and layer 2s like Binance Smart Chain, Polygon, as well as networks like Arbitrum and Optimism. They are completely rebuilding an entire new framework, an entirely different technology stack. And if you guys haven't familiarized yourself yet so far with the Radix full stack, I highly recommend you guys go here to the Radix page, click on the Learn tab, and click Full Stack. You can find it at radixdlt.com. It is the great primer that will tell you about how Radix is aiming to fix the user experience, it's aiming to fix scalability, and so many of the core elements that have held back crypto for so long. Now, I want to go ahead, spend a little bit of time here to talk about why I like Radix. Not only do they have such a big focus here on developers, if you guys are looking to learn a smart contract language to develop applications in an emerging ecosystem other than Solidity, Scripto, the native programming language, and the Radix developer ecosystem is your best bet, in my opinion. If you really want my candid opinion, I think Radix is one of the best environments for developers. They're serious. They'll not only provide initial kind of grants and kind of giveaways for early stage projects that can help to get them off the ground during competitions, but they'll provide you with the mentorship and resources to really help you get there. And there's a great developer community that will also help you in getting started with crypto. But there's a couple key things here that I really like about Scripto and the broader Radix ecosystem. And when you're developing applications inside Scripto within the Radix ecosystem, you essentially have a lot of really great built-in features like Instapass that are already built from the gate. Now, this is not only used, of course, for kind of the on-ramping and stuff for Radix and EXRD, the tokenized version of Radix, but this is also going to be a native KYC AML on-ramp in towards utilizing various applications. Now, why is this a big deal, right? Because in the same way that we are so amped up here about PayPal launching a new stablecoin in the crypto space, right? Wouldn't it be great if PayPal could not just deploy stablecoins where it has its own KYC AML off-ramp, on and off ramps outside on its applications, but one that could natively be tied to your wallet in your DeFi activities, where PayPal could essentially build decentralized applications, where For example, Coinbase and even institutions like BlackRock could build banking-grade applications that are decentralized and trustless on-chain. And they could still maintain the KYC and AML compliant on and off ramps for liquidity and approval of utilizing those applications with funds that you might have on BlackRock. That would be huge. That is the only way, unfortunately, guys, whether you like it or not, is the only way institutions are going to build institutional grade applications and bring institutional grade liquidity into the space. Whether you're talking about retail users, institutional investors, corporate clients that are running corporate treasury accounts, they are going to have to do it this way. And this is really big here to have this built in. There are some maybe secondary solutions like this, maybe on Ethereum, but not on the vast majority of layer 1 and layer 2s. And along with that as well, to have this built from the get-go, this infrastructure, it showcases that Radix knows that it needs to build a professional approach and tailored to the needs of those we are trying to reach and bring into the space. That's the only way we're going to make DeFi a $1 trillion industry. Not to mention as well, they have a tokenized version of Radix. So if you guys are on the Ethereum blockchain and you like to buy through Uniswap and you want to just kind of get started in building a position, good news is you can essentially get EXRD and bridge it to XRD. And you can start earning staking rewards and stuff on the Radix network, being a validator. Now, the cool thing here about Radix is that essentially there's already some great projects being built on it. There's SRWA. There's just a recent blog post that dropped back about a couple of days ago, about a week ago, that covered SRWA. I want to spend some time to talk about them in another quick project that's building in the ecosystem. SRWA is focused on bringing real-world DeFi. Essentially speaking, they're tied towards an underpinning project, CowDAO, which is essentially focused on tokenizing real-world assets and allowing you to essentially utilize those real-world assets as a form of collateral, maybe as a form of investment. There's all kinds of different paths you can utilize real-world assets with in the DeFi world. And essentially they're doing this with a combination of an SPV or special purpose vehicle, which is a legal entity that will actually own the underlying assets, and having actual NFT claims on that SPV, or kind of NFTs that actually have claimed ownership over the special purpose vehicle. Now, this is something that was utilized for crowdfunding. Like when I raised my startup, we used an SPV through WeFunder. And these are structured legal entities that have real weight here. And along with that as well, this is really quite cool because there's an interactive Figma link here within the actual article that'll showcase how the actual UI works, how you can navigate through and see the application. And again, this is awesome to see because so much of DeFi, again, is in this kind of bubble in the crypto space. We don't tap into real world assets. And Radix is making this dramatically simplified by simplifying the process around NFTs, lowering the cost, bringing dramatic degrees of scalability, and making it so much easier for developers to spin up these kind of applications versus having to do them in Solidity. So I really give hats off to them on this. And also as well, Sunday Liquidity Protocol, which is focused on liquid staking. So essentially speaking, you guys are probably familiar with the whole range of liquid staking applications in the crypto space. There's Lido and a whole range of others that will essentially allow you to have a tokenized version of your staked Radix as a validator on the network that you can go out and utilize in the DeFi ecosystem. You can use as collateral, you can swap it between other assets, just essentially making your staked liquidity liquid in the meantime. So this is, again, another really great application. All these kind of DeFi primitives and also some really new exciting ones where you're tapping into real world DeFi is already starting to come to Radix during the bear market, during its early years as a project. So I think this is really exciting stuff. And you just don't see this kind of level of excitement in Ethereum right now. I cannot name one application, guys, that's really got me amped up in the Ethereum or EVM ecosystem. It's just so difficult to build new applications. And the problem is that when you try to do something, when you try to be the best kind of participant in the market and add some value and take some risk and have some skin in the game, your protocol gets hacked. Whereas versus in the Ethereum ecosystem, where if you wanted to build some kind of new, latest, greatest application, it's probably going to take thousands of lines of code, and you got to worry about smart contract exploits. With crypto, you can likely reduce that contract code by at a minimum 90%, as it's an asset-oriented language, which differs from Solidity in the EVM ecosystem. You can dramatically cut down the development time to build applications, but also the security concerns as well. Due to the way that it's an asset-oriented language, it's clear as to what funds can do and where they can move. And along with that as well, there's a big user experience improvement here, which can help to prevent any type of malicious contracts. That is transaction manifests. Now, I'm going to leave you guys here with this important reading here. If you guys want to find it, it's in the Radix blog. one of the most recent articles that came out. This talks about how essentially, unlike MetaMask and so many Ethereum wallets, where when you're signing a transaction on an EVM network, you're just kind of guessing what you're doing with your transaction. With this string of hexadecimal code that doesn't make any sense, transaction manifests allow you to know visually within a Radix wallet what you're essentially doing with your funds. Who you're giving your funds to. Are you swapping between an asset, or are you sending all your funds to a malicious address? All put in plain English, and this is so essential here. If we're talking about bringing the trillions of dollars of liquidity in the crypto space, we've got to fix these things. And this is why, again, at the end of it all, guys, I come back here towards this topic of BlackRock and all these entities, PayPal. You know, they're just dipping their toes in the industry right now, right? Filing an ETF approval is not a big deal, right? If it's not likely to get approved, you know, at the end of the day, an ETF approval doesn't cost much for an entity like BlackRock, which just makes hand over fist money every single month, every single quarter, every single year, because they're managing a ton of assets. They got to win out eventually. Yeah, pretty much all the time. PayPal, right? Sustainable, solid business in many ways in payments, right? Launching PYUSD, which seems like it had been in the work for over a year if you look at the on-chain data. Not a really big deal, right? So these are the kind of things we got to ask ourselves, and we got to be grounded about, and we have to ask whether or not, you know, these companies are really going to get invested in the crypto industry, if they're going to really start building on Ethereum, or they're going to be building on a network like Radix that actually gives them the foundation that they can trust their users and their capital and the trust that they've built from those users in the DeFi ecosystem. Can they really trust engaging in DeFi and crypto? That's the question they've got to ask, and we got to make sure we give them the best potential environment in order to succeed. So we got to start asking those questions, guys. We got to start setting higher standards for ourselves as an industry, because if we don't, that liquidity is never coming. Those new users are not coming, and we're going to realize that from here on out, it's a game of musical chairs about who can get out of the market first, because the game will have been up. We've got to come up with a real foundation for real use cases, guys. We can't just believe that it's going to be more of the same. And I say that from a place of love, of compassion for you guys, because this is your money. And as a macro trader, I'm not in love with crypto. I definitely like it as an industry, but I care more about making sure I preserve and protect my purchasing power. And you guys should too. So anyways, guys, if you like this video, if you made it all the way here, if you've been listening to me ramble this entire time, if you guys could drop a like, really appreciate it. That's going to be it for today's video. Have a wonderful rest of your day, and I will see you guys on Friday. Trade smart, stay safe. I'll see you all in the next video. Take care, everyone.